ceiling, so I'm gonna draw a horizontal line there. Now I see my floor, I'll draw a horizontal line right here. But I have these two. Now the next step is to draw my fib. I'm gonna start from the top of the ceiling. I'm gonna drag it all the way down to the bottom of the ceiling. It's gonna come from wick to wick. Feel me? From this candle up here to this candle down here. Now it's gonna show me my percentage points. Feel me? Here, let me move this other way. So now it's gonna show me like all my percentage points. Feel me? Here's my 50%. You know my point. Here's the 0. Here's the 1, and everything in between. And now my next step is I want to look for any supply and demand zones. So supply and demand zones is anything like any equal highs, any equal lows. So I'm gonna come over here. I'm gonna highlight. I'm gonna grab my rectangle, and all I'm gonna do is you see how my cross has a horizontal line and a vertical line. I'm just gonna start from the top and I'm just gonna drag it down and see if any of these touch. So for example, like right here, I found a zone. So what I'll do is I'll actually draw it from here. I'll extend it all the way here. That's one zone. Now I'm gonna do it again. Coming from here. But I found another zone. So I'm gonna grab it from here, just extend it. And how you know that it's a good support how you know it's a good supply and demand zone is you just see like if like you see how it's like somebody's like ceiling right here, but then it's like somebody's floor right here, and that kind of like plays around that area. So you see like break construction. Like here's a perfect one right here. So if I were to highlight this area and I were to extend it, you see how many times it touches that zone? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And it goes on and on and on. So we keep counting. It probably touched the zone at least like 20, 30 times, to be honest. Like even here, feel me? Matter of fact, I could actually extend this a little bit more too, feel me? Because of this one right here. So now I'll keep going. But here's another one. And so in these supply and demand zones, they show you like where the market's gonna like play around a lot. Like feel me? Every now and then, like it might bounce off one of these areas. Like for example, how it like bounced off this one and then like it broke through when it had a break in structure, broke through and then retested, and then it came back down and shot. That's like our when I break it down a little bit more, I'll explain how to hop in for entry. And I have one last supply and demand zone right here. But all right, so cool. All right, so these are all supply and demand zones. So I know like where market likes to bounce off a lot. Feel me? Where market likes to play around and stuff like that. Now my next step is I want to look for any institutional candles. So an institutional candle is like where the market likes to spike. So for example, like this would be an institutional candle, this would be an institutional candle. These market spiked here, it spiked here, and it spiked here. So what I could potentially see for this is there's 5 rules. There's 5 rules of trading. Like before you even hop into a trade, the first one is you want to find out which way is the trend going. Is the trend going down or is it going up? So is it a down uptrend? If it's a downtrend, we're gonna look for sells. If it's an uptrend, we're gonna look for buys. The second thing we're looking for is any liquidity. So we want to find liquidity, like where the market likes to like fuck around and just kind of like sit, like not really go anywhere. Like this is a perfect example. Like you see how market kind of just sat here. This right here would be a liquidity zone. Now I'm looking for now I'm looking for the market to fill in the imbalance. So filling in the imbalance is something like this, for example. You see how market started here and it came all the way up, but then it finally back down to this zone, like when it first started. Right, exactly. Filling all that naked space. Feel me? So this would be an example of filling in the imbalance. So after that's the third one, right? Yeah. Now what I'm looking for is a break of structure. So how the market moves is here, let's but so this is how the market moves. So market comes up, market's gonna have a pullback, and then market's gonna shoot up again from here, correct? And every now and then what we'll see is we'll see something like this happen. We'll see market come down, pull back up, and then what it'll do is it'll actually fail to, so when we see that pullback again, what we would like to see, like market to, fill in that, oh shit. So we would like to see market, create another, higher high, right? But if it doesn't do that, say if it like breaks down here, right? Say if market closed down here, what's gonna happen is market's not gonna start selling off as so. And market might pull up and then it'll sell off again. So how I look at the market is like as like zigzags. You feel me? So for example, this right here would be a fuck. This right here would be a lower low. Right here. Now this right here would be our higher high because it's the highest point. And then everything in between is either a lower high or a higher low. So this would be a higher, this would be a lower high. This would be a higher low. And you'll see the market do that a lot. So what would this one be right here? Would it be a lower high or a higher low? Yes, sir. We have our higher low. All right, now, so this for example would be a market continuation, right? Now this right here is a market reversal. So let's fix this a little bit. Yeah, right. You know who's really good at line charts? Sean Augentussin. He's on the DCX Academy. So or yeah, so he does candle trading, but if you want to do line trading, you definitely want to study Sean because yeah, Sean breaks down lines pretty good. All right, so for example, what would this one be? Now that the market's on a downtrend, would this be a lower high? Would this be a lower high or a higher low? Yes, sir. Lower high. High. Higher low. Yeah, this is how I look at the market, and it's just I feel like it's the easiest way to look at it. Uh, and lower high. So remember how market failed to create that higher high up here? So this would be right. This right here would be our break of structure. So what I would do is I would actually highlight that right here. Okay. So remember, so up here, let's say, but So say if we were hopping into these trades, right? So say if we miss the initial entry, right? That's all right. Because feel me, what we're gonna do is we're gonna wait for market to pull back and we'll enter right here. Now some people would take leave their take profit here, or some people would extend it and just wait for and take it all the way and ride it all the way to the top. But either way, you'll still profit, feel me? It's all about like how long you want to hold that trade for. So like even if you were to miss this one, you catch this one right here. But say some people they'll hop in, they'll think that the market's gonna continue that, right? And what they'll do is they'll hop in for another one and market fails to create that higher high. So what ends up happening, so they'll end up like getting stopped short. So now because the market has changed, now we're not looking for buys anymore, right? Because feel me, there's really no point. Because feel me, we're only gonna catch that pullback. So now once we see that break of structure, we're looking for sells. So we would look for shorts in the market. Feel me? And then we will start catching these movements. Feel me? Here, and then wait for the market to pull back, and then we catch it here. Or you could just, have it here and just hold it all the way down up until, that lower low. All depends on how long you want to stay in that trade for. But either way, money is money, bro. Feel me? Me myself, I'm an institutional trader, so I don't mind like waiting and holding trades for like a week. Yeah. So I'm pretty sure you got the gist of this. So what we'll do is we'll delete that. Oh, where? Yeah, yeah, yeah. Right, right, right. Say a word. Hey, I like that. Absolutely. Facts. So for example, so remember what we were talking about institutional candles? So we're looking for that candle that made shit pop off. And what the one that pops out to me is this one right here. So what I did was I actually went on and I'm gonna draw a gam box. So I'm gonna draw it from wick to wick. I'm gonna extend it around here. So hopefully what I'm looking for is market to actually pull back to the 50% of that candle, mitigate it. And as soon as it does, I'm gonna look for a sell. Because remember, market's on a downtrend. On downtrends, we look for sells. So we would I got this short position, but and but put my stop loss at 0. I'm gonna actually go back in time and I'll actually like find out when the last time they actually broke that low. So for example right here, because this is our current low, right? But it broke that low over here and actually broke it here too. So I mean if I want, I could take it right here for a 1 to 3, or if I really want to take it down, I'll probably take it down in this candle down here and I have a 1 to 6. So I'm only risking $18 to gain, 110, which is a great trade. Feel me? But you want to wait until market, pulls up to that zone. I'm gonna mark up another chart for you, a fresh one. So let's go on AUD CAD. So remember, we're gonna go top down analysis. Feel me? We're gonna go from big time frame and we're gonna cut it down short. So let's start fresh. We'll delete all this, remove drawings. But so top down analysis. So first things first, we look for our floor and our ceiling, correct? So this right here would be our resistance. This right here would be our support. But now I have that. Now what I'm going to do is I'm going to draw a fib. So from wick to wick, from the top to the bottom. But I have everything, right? So now I'm going to cut down to a shorter time frame. I'm going to go on the 4 hour. Now on the 4 hour, what are we looking for? Supply and demand zones, correct? So, but let's see. Some ones that pop out to me is, let's see. I like this one right here. Yeah, this one's sturdy. So I'll drop this one. Another one I see is here. Remember, I'm just looking for equal highs and equal lows. Feel me? And market current price looks like it's actually bouncing off this supply and demand zone. So I mean that's pretty valid. Feel me? Let's see, another one we could do is we could do this one right here, or we could do this top one. I like this one, so I'm gonna mark that one. Start from here, just extend it. Another supply and demand zone would be right here. And we got some supply and demand right here as well. Yeah, never be afraid to like look back in time. I mean, the market's always gonna react, off like previous what's the word for it? Off like what it did previously. I don't know, it's kind of like an algorithm, you feel me? Like the market likes to repeat itself. So yeah, exactly. So, but here's another supply and demand zone. And but so all right, so I have my supply and demand zones. My next step is I'm actually gonna look for an institutional candle. So I'm gonna drop down to a 1 hour time frame, and I'm gonna see any candle that right now this is what's popping out right here. Feel me? All this 50% of this candle already got mitigated, and so for example, I'll actually point it out to you as well. So if we grabbed it from wick to wick and we extended it, you could see where it got mitigated at this candle right here. And you see how it touched exactly at that 50% and then it popped off? The market's always going to do that, you feel me? So we actually have an institutional candle here, so we could probably see, some reaction somewhere over here. I don't know if it's gonna happen now. It might, pull down here a bit and then come up. But yeah, bro, there's that. Um, let's see. I believe this was on a downtrend overall. Let's go back on daily time frame. Yep. Yeah, so it's on downtrend. So on downtrends, we're gonna look for sells. So it could do one of two things. It could come down here. So it could
space
all right. So market could do one of two things. So market could either bounce off this supply and demand zone, or it might reverse bounce off this one and then shoot down. But right now it's reacting off this one. So it's on the 4 hour. Let's see. All right, so this one's popping up. Come down to 1 hour. I kind of like this candle right here, to be honest. This one's looking pretty sturdy. So this is what we'll do. I'm actually gonna draw a GAN box again. So we'll draw one from here. I'm gonna highlight this candle right here, extend it to wick, and but now what I want to see here is I want to see market actually pull down to the 0.5 right here, 50% in this candle, and then I want to see it pop up, pop up. So we're gonna do a long position now. So have it here. We'll put this at the 1, and this will extend up to the previous supply and demand zone. So you can actually take this market, you can take it up here for like a 1-to-6 risk to reward. So for 1-to-6 risk to reward, you're risking $17 to gain 100. Or if you want to go crazy, you could just hold this shit and bring it up here. Now you're risking, you're still risking $17, but you're gonna gain 145. So it all depends on where you want to cash out. Feel me? I know some like me, for example, I would love to just catch this shit and hold it for like a month and just take it to the top and come to like a risking $17 to gain like 206. But personally, I would probably hop in for 3 entries. So this right here would be my take profit 1. This right here would be my take profit 2, and this right here would be my take profit 3. Just these 3 supply and demand zones. You feel me? But the thing about this risk reward is I don't know if market might pull back, all the way up here. It might just bounce off this first one and then reverse, or it might bounce off the second one and reverse. So just to be safe, I'll probably play it right here. I'll probably play a 1-to-6, and I'll be sturdy with that. Feel me? Risking $17 to gain 100. It's still good money. Feel me? Can't complain. But I feel like anything that's like a 1-to-3 risk reward is good. Me personally, I like to do like 1-to-5s, 1-to-7s. That's just my that's just my preference. But yeah, I definitely see market coming up. By the way, great way to catch a trend is just like draw like a trend line from one wick to another and just see how many times it bounces off. So if it bounces off like 3 times, that's a good trend. See, 1, 3, 4. That's a valid trend. Feel me? I could possibly take this down further too. But yeah, I mean, this is just on a shorter time frame. Like obviously, like on the daily time frame, it might look a little bit different. But since I'm on the 1 hour, I'm gonna catch these moves while while they're here. Yeah, I studied. Yeah, I studied. Yeah, he was the first one I studied. Yep, it's the same thing, bro. Feel me? Like how you would mark up your chart for like DCX is the same way you'll mark up your chart for like for FRX. Like I can't, me, nah, I don't. Nah. Oops. Nah, bro. Yeah, this is free. All right, I'm gonna show you some crypto pairs right now. Yeah. I have everything from crypto to indices to commodities and then forex pairs. So I actually caught this sell from here. I caught this. Nah, gold is fun. I love trading gold. Caught ETH too. Feel me? I caught ETH from here to here. Um, what else did I catch? I think. Oh yeah, I caught Sol. Sol, I think I made about like 2,300 off this move from here to here, and this is where I cashed out. Um, yeah, but you see how it like stopped exactly at the 0.5? Just because of where that institutional candle was. Feel me? Market's always gonna come back to that zone, no matter what. What else did I catch? I caught Nas. Yeah, I caught Nas from here down it. I think I cashed out either here or here. I can't remember. I should have took it down here though. Feel me? But it is what it is. Yeah, this one I definitely ate off, bro. Feel me? I caught it from here. I caught it from exactly the 0.5 of this candle. Feel me? And then you catch it from here. This is your entry. Feel me? Market pulls up, you hop in here, and then you just take that shit down. And I think I got like 2,500 off this one, if I'm not mistaken. Sol, Sol, I caught like 3 point, how much I catch? 3,500 off Sol. What else? Let's see. So yeah, I'm actually looking at this right now. So this is a big institutional candle on gold. I'm waiting for this shit to fill in before I actually hop in for a buy. I just want market because mind you, like all this, feel me, that's a lot of like that's a lot of space that needs to be filled in. And right now, Marcus is consolidating. Feel me, it's not really going anywhere. It's just chilling. I'm actually waiting for market to pull down and actually hop in for a buy. So if you look at this from a 4 hour time frame, let's reset this chart. But yeah, so I'm just waiting for market to pull down right here to like 1696. Yeah, 1696, and I'll actually or 1695, and I'll take it all the way up here back to the 0.382. And my risk reward on this would be, let's see, I'm risking like 1,300 to gain 13,000. I think that's great, bro. Feel me? You can't complain about that. You're risking 4 figures to gain five. That's bro, that's easy money. And mind you, like you don't have to hop in with a standard. You feel me? Like you can always hop in like with a 0.01 and just catch the move. Just make sure that your risk to reward is good. You have proper risk management. Like feel me? You could lose 5 trades in a row, but because your risk to reward is so good, that 6th trade, bro, you could like gain everything back plus some. Feel me? Like because off my trades, like when I first started, bro, I was only risking like 2 to 3% of my account. You feel me? Like um now like now I'm risking maybe like 15 to like yeah like 10 to 15% of my account. But either way, like I just I've like gained my account size a lot bigger now. So if I could risk a bit more. Word. Nah, that's good money, bro. Feel me? Um right. Mhm. Right. Nah, I mean, so I noticed that this imbalance has already got filled in. So It's, so this is oil, feel me? So I highlighted this candle right here, feel me? This institutional candle from wick to wick, and this one got filled in here. And so feel me, I should have took it for a buy and just took it from up here to this supply and demand zone. And then I should have took that sell down. But now what I'm gonna wait is I'm actually gonna wait for market to hit here at like 93 cents and or $93, and then I'll probably take it up for another buy. So feel me, it's all about waiting for the perfect entry, bro. Feel me? Never rush a trade, never chase a trade. Feel me? Take from here, and I could take it back up to the supply and demand zone if I wanted to, but I'll probably take it up to like 236. Yeah. So 1 to 8 risk reward, I'm risking $77 to gain 675. I'm cool with that, bro. But yeah, bro, I mean, you got any questions? Like, you feel me? Let me know. Right. Honestly, I would just like look out for like institutional candles. You feel me? I feel like because that's like the safest way to play. That's like the safest way to to hop in for entries. Um, let's see. So yeah, just a lot of them. Like for example, this red one, this blue one right here, this red one. Yeah, any like big candles, like you feel me? Anything that looks like out of place. This one, this one actually got filled in from that. Yeah, let's reset this chart. But so you see how this 50% of that candle got filled in from here, and then market shot down, and we can do the same thing again for me. Like, let's see. All right, so let's look at this candle. This look how many times it filled this in. Feel me? It consolidated here, but you know it still touched that 50. So there's that one. For example, this one. Let's see. Now this one hasn't even got touched yet. So this one might. This one has it. Oh shit! It did. Look from right here. See, I'm telling you, like it's funny how yeah. I mean, nah, it's all good. We got like 5 minutes left. But yeah.